Hi everyone, my name is Joanna Filgueiras. I'm a realtor with the Grand Florida Homes team. Today, I want to talk to you a little bit about the process of buying a property in South Florida. So, a lot of people think that the first step to take when buying a property is finding the home, and in my opinion, that's a mistake. First thing that needs to be done is determine how much you can afford. And for that, you need to get pre-qualified by a bank or mortgage broker and really know how much not only you're going to be pre-qualified by, but also how much you want to spend a month. Because a lot of times people will get pre-qualified for, let's say, 500,000, but because of the monthly payments, they can really just afford 250, or they just want to spend what it would be to have a $250,000 mortgage. So talk to a mortgage broker or a banker and know exactly how much you can afford a month. Ask them how much the payments will be on that pre-qualification. If you pre-qualify for 500 or 300 or 400 or whatever it is, ask how much the payments will be. They usually will tell you it depends on maintenance fee, depends on taxes. But if you know how much your mortgage is, then we can always add up once we find the property and see how much the maintenance fee is or how much the taxes are. We can add up and know how much you can afford. So that would be step one. And of course, if you don't know someone that can pre-qualify you, you can always contact us. We do have good contacts for that. Then after you pre-qualify, then we'll go and search for a property. And we're going to have to determine the area you want to be in. It's also important, because we do have a lot of clients that will say, oh, I want to be anywhere between Fort Lauderdale and Miami-Dade or downtown Miami. That's a huge area and very different aspects to it. So know where you want to be and kind of close to what you want to be, what are your priorities, so we can go for that. Then we're going to look for a property. Once we found something, you're going to put an offer. An offer is pretty much the same as the contract. It becomes a legal contract once both parties agree on all the terms, but it looks just like the contract, okay? So once you put an offer, you're going to have to present either the proof of funds, that if you're going to be paying cash or if you're going to be putting a large down payment, you need to have proof of funds showing that you have the money. Very important nowadays. You must, I would say, have the proof of funds in the United States, especially if you're dealing with a bank, if you're purchasing a foreclosure, they're going to ask you for that. So you have to have the proof of funds and the pre-qualification letter. If you're doing financing, you're going to put the offer, you're going to present that. Once the offer is accepted, you also have to put a good faith deposit, which depends on the price of the property, but I would say around 5% or 10% of the purchase price. And that good faith stays in escrow with a title company or the real estate company. And it will be deducted from your costs on the closing, okay? So it will be deducted from either your down payment or your closing costs. Once the property is accepted, you put the deposit. You have the days for the inspections. Legally, you have time to do inspections on the property to make sure that everything is okay, no leakings, no structural damages, termites, and all of that. Inspections done, it goes into the title process. The buyer doesn't really have to do anything during that time. If you're doing finance, they may ask you for some documents and things like that, but the title company will do all the search to make sure that you're buying the property you think you're buying, and there are no liens attached to the property, no issues with the transfer of title. Costs you have on the side, usually if you're doing finance, you're going to have to pay for the appraisal that the bank is going to order. That will vary on price, but that's paid before closing. So when it gets to the closing, you have your closing costs, which you can go from 1%, 1% only if you're doing cash. If you're doing finance, it's never going to be this low, but it can go from 1% to 6%. If it's more than 6%, be a little discouraged about it, because it's a lot. 6% is usually the max that it should go to, but take a look at the cost, take a look at what is being charged, and your realtor can always tell you about that. We can always review the closing statement and tell you what the costs are being. And then you go into closing, and the day of the purchase belongs to the buyer. There are going to be prorations on the closing statement, so you're paying your part of the taxes for that year and all of that. So that's kind of like a short process. What to expect. If you're doing financing, you should be closing within 30 to 60 days, depending on your financing. Conventional financing is usually faster. That's usually the one you're putting a large down payment. FHA financing, which has been very used lately because it's a low down payment and the credit score doesn't need to be as high. It's usually for a lot of first-time homeowners are using it, and you can, very important, a lot of people don't know, but FHA can be used if you have another property, as long as it's not another FHA loan. So as long as you're going to occupy the property, you may be qualified for FHA, and their down payment right now, it's only 3.5%. So it's a great option for people they're looking to buy and sometimes have another property and it's not the right time to get rid of it because the market is not so good. They can get an FHA financing. You can always talk to us about it as well. So that was a quick explanation on the process of buying a property. If you have any more questions, you can always contact us, and please do so. Also send us some options about what would you like to hear. My email is joannagfh@gmail.com. My phone number is 305-790-0628, and visit my website at www.gfhteam.com. I look forward to hearing from you. Thank you.